I have made over $15,000 in one single trading day using the secret fair value gap trading strategy that nobody talks about. This is by far the easiest trading strategy for beginners who are struggling to pass their prop firm challenges and facing inconsistencies in trading, even though watching hours and hours of ICT content. In this video, I will exactly show you the secret strategy with over 90% win rate that no YouTuber talks about using fair value gaps. With this strategy alone, I have achieved $4 million in funding capital and 6 figures in withdrawals. Yes, you can do it too. I will share you every secret about how fair value gap forms, daily bias, entry pattern, risk management, and everything you need to make consistent payouts from prop firms. And I promise you, if you follow the every rule I gave you and put in the work, you are going to make bags that brokies never imagined. Watch the video till the end and take action or stay broke. The first thing you should know is the real meaning of the FVG. The explanations you find in the YouTube and Google is completely nonsense. It is not the real fair value gap piece. So before I begin into the video, I have a super exciting news to share with you guys that I am going to giving away a 100k prop firm challenge for free. I am going to give the instructions on how to enter the giveaway later in the video. So make sure to pay attention to the end. So let's get back into the video. The FVGs are the areas where the money that market maker left. So if you understand, the market maker is the one who is providing the liquidity for the retail traders. So if you see, the market normally moves in a structural format. So the reason behind the structural format of the market is if you are buying the positions, the market maker is the one who is taking the opposite side of the orders. If you see, the market maker is acting as the liquidity provider. If you buy, the market maker will sell. So this is how the markets works. The market maker business is to provide the liquidity and he will take the commission from the orders. So if you see here, if the market is going up like this in this leg, if you see in this leg the market is going up, so the market maker orders are all sell orders because the market maker is providing the liquidity. The market maker will sell, the market maker will sell, the market maker will sell. If you see, to mitigate the losses of the sell orders, the market maker will come back and mitigate the losses at break even and it will go up. The simple process happens over and over and over and again. So this is why the market is in the structural format. This is the reason why the market never moves in a straight line. If there is no market maker in the markets, the prices will look like this. It will be a huge spikes up and down like a crypto meme coin market. If you see on any regulated market and market makers are there, the market moves like this. Any market, if the market makers are there, this is their business. They provide the liquidity. So sometimes what will happen is the market maker don't mitigate their losses in some areas. So those areas are called inefficiencies. These are very, very important. Why they are important? Because the market maker have loss positions here. The market maker have huge negative positions here. So to mitigate their losses at break even, the market maker will come and mitigate their losses before they go. So this is the basic understanding of the fair value gap. Fair value gap is nothing but money, liquidity, fair value gap, everything is same because this is where the order is there, money is there. Money is nothing but liquidity. So the fair value gap is one of the very, 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 very important confluences for the entries. So you understood what is the fair value gap is. So let's learn about the other stuff which you should combine with the fair value gap to make the 90% win rate strategy. Stay tuned, guys. What makes the FVG high probable? There are number of fair value gaps in the marketplace is there. So what makes the fair value gap low probable and what makes the fair value gap high probable like this fair value gaps? So everything should be combined with the loss. I have seen lot of traders who learned about the liquidity and taking the trades from every liquidity like this. If the market is moving like this, they will take from this liquidity, this liquidity, this liquidity. So this is not how the trading should work. They don't understand anything. They are just trading another retail concepts. So to really understand the key to the marketplace, you should use logic and combine the things. So if you see, the high probable fair value gaps always come after the liquidity grab. After the liquidity is grabbed, the fair value gaps are very, 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 very high probable. The reason behind is after the liquidity is grabbed, all the money is collected here. All the money behind here is collected here. All the money is collected. So this fair value gap is the confirmation that the algo wanna move the price up. The market makers are ready to shoot the price. So this is the confirmation which we are waiting for, and this is the timing which we are waiting for. The kill zone is the timing which we are waiting for. So when combine the logic behind the fair value gap, our win rate will skyrocket. This is where 99% of the traders will do wrong. They will try in one pattern and they will try to identify the pattern in the marketplace and they will trade. This is not how the trading works, how the market moves. If you combine the logic behind all of the things, you will find the key to the marketplace. This is exactly how I find out. I have spent last 5 years backtesting day in day out. I have backtested more than 8 hours every day to find this stuff. You are learning all the stuff in a single video. So make sure you take the notes. I know already your minds are started blowing up after really knowing how the market works, how the market maker operate in the marketplace, everything, because you can't find anywhere this stuff in the YouTube videos. So when you combine the kill zones and the liquidity and the fair value gaps as a confirmation, your win rate will skyrocket. Your win rate will skyrocket, and you will take the positions here. You will take the positions here and target next transaction liquidity. This is where everybody will take the wrong. They will think they should target the next daily level. They should target the next 4-hour level. The easiest target is the next transaction level. Transaction means the liquidity. Where the liquidity is transferred, it should be a target. Simple. You will get very high RR. Simple thing like this. The target is for the cells, it should be somewhere around here. So this is the simplest thing which you need to achieve this 90% win rate. So I will explain the real mechanics behind it, why the market is respecting this thing. This strategy always works and always been working from the ages. I have backtested this stuff in 2007 charts, 2008 charts, everything is same. So I will explain why. If you see, this market is a zero-sum game. If one person loses, another person wins. There is no money coming outside from the trees or anything. This is a zero-sum game. If you lose, another person will win. This is how the market works. So in order to understand the market mechanics, first you need to understand the players in the market. So these are all the players in the marketplace. Newly the prop firms are added. So these are all the players in the marketplace: market makers, hedge fund, investment banks, businesses, big banks, private investment firms, small banks, central banks, pension firms, prop firms. So everybody's objective is different. Everybody's objective about the forex market is different. For example, businesses will use the forex market to use as a transaction tool to get the other currencies. So like this, the central banks use this forex market to regulate their currencies. So everybody's objectives with this forex market is different. So you should understand these are the players in the market liquidity. So what is meant by zero-sum game? For example, if you take a trade, there should be another trader taking the opposite trade for you, right? This is what brokers market their stuff, but this is not the case happening in the market. The market makers are the mediators who will execute your trade. The market maker will take the opposite side of your trade. If you buy, they will sell. So why do you think the conditions are favorable for the retail trader? They want you to lose money. They want you to lose money. The brokers and the market makers want you to lose money, because if you lose money, this person will gain money. These guys are making millions of dollars every session by taking all the stop losses, all the liquidity. This is not a hidden lie. You can type in the Google spoofing. You can get a lot of documentaries of the market maker scams, what they are doing. I have researched a lot about these market maker scams and found a strategy to go with the market makers, because you can't go against the market maker, because this market maker has a lot of liquidity to control the market. He is the dominant guy in the marketplace. He can control the price action. He can print whatever candle he want to print. So what you can do is the simple thing: you should follow this market maker in order to profit. Simple. You should study the enemy. If you study the enemy, you can win the war. This is the simple thing you can follow. So if you see here, if you buy, they will sell. So this is where 99% of the retailers are getting targeted. 99% of the retail traders are using these type of silly patterns: support, resistance, smart money, OBs. These are all getting targeted. So you should wait for these liquidities to be taken out and all the majority of the liquidity to be accumulated, then you should enter the trade. So this is the first thing why I told about the liquidity. Liquidity is very important. After all the stop losses are taken out, now the market maker gained liquidity, then they will move the price. Simple. This is the never ending process. This is the market mechanics behind this process. I will guarantee you have not watched any YouTube video explaining this stuff in depth. And also, what's the importance of the timing? Timing is very crucial, because in the London session opening means the stock market of the London session will open. The stock market of the London session will open. The stock market of the London session is open. Let's say this is the stock market of the London, and let's say this is the person from the US who wanna buy the London stocks. This is the person from the US who wanna buy the London stocks. So he should use the forex in order to buy the London stocks. So indirectly, to buy the London stocks, he is using the forex. So like this, lot of banks, lot of central banks, lot of users will use the forex indirectly to buy the stocks in the London. So that's why ICT call them as kill zones. In these times, lot of liquidity will come, lot of liquidity, big businesses to take their profits, etc. For example, if there is a business who is operating in the two time zones, New York and London time zone, and they wanna book profits or anything from their company, they will use forex. Simple thing they will use. So this forex is used for many perspectives. So this is why at the kill zone, at the time of the stock exchange open, automatically the liquidity will be grabbed in the London session too, simply because of the transactions exactly to happen. So this is the main reason why the stop hunts happen exactly at the timing. So you got the basic understanding between liquidity and the timing and the fair value gap. If you combine these three things, if you combine the liquidity, FVG, timing, that's it, you got the Holy Grail. This is the only three things you need in order to follow this market maker. This is how they will trap the players. For example, if you see, let's say there is a liquidity like this here, so you should wait for the liquidity to be taken out first. And what is the confirmation? Lot of traders will directly enter here without any confirmation. Your confirmation is the fair value gap. Because it indicates the market is ready to go, and you just place your order at the fair value, then it will boom, and it should be in the kill zone. Simple. This is the money making glitch you can easily follow. You will easily get 90% win rate. Why I am telling the 90% win rate? Why I am telling only 90% win rate, not 100%? Because these market makers are very smart. If they are giving 100% win rate to a strategy, everybody will follow that strategy, right? So that's why they will give wins to some of the retail concepts sometimes. For example, this type of support resistance work 1 in 10 times. This is how they will control the whole market. And also the main another reason to take the liquidity is to provide the liquidity to the central banks, to the hedge funds, and the big investment firms, because they can't execute their orders without the slippage. For example, I will explain you here. I'm explaining a lot of stuff, so messy. So for example, like this, you small retailer can execute your orders wherever you want. You can execute your orders here. You can do wherever you want, because the market maker is taking the opposite side of you. Whereas big players like central banks and hedge funds, they can't execute wherever they want, because they will get liquidity problems, because market makers don't take the opposite side of their orders. So that's why they will search for the liquidity. The algorithm will search for the liquidity to facilitate their orders. They will search for the liquidity. The liquidity will be here. Simple. They will take the liquidity and they will boom. So the liquidity is used for the profit taking purposes and also the entry purposes. So this is in this scenario I explained for the entry purposes. These guys use the liquidity as the entry. So always the best trades come after the liquidity is taken out. Simple. Always the best trades come after the liquidity is taken out. So as a confirmation, you are waiting for the fair value gap for the algorithm to show the intentions you are entering, and this should be a kill zone. That's money making glitch. If you use this strategy, you can make a lot of withdrawals from the marketplace, because we have backtested a lot of years of data using this strategy. Me and my team in the liquidity inducement theorem have backtested over past 15 years of data of this hedge, because I have some really killers in my group, in my one-on-one private mentorship, and they really do lot of backtesting using some Python stuff and everything. So if you can follow the rules I gave you, you can be financially free for your life. Now I will show you some real life examples from the 2008 charts, 2024 charts using the same strategy, and you will be shocked after seeing the results. So before going into the backtest of the money glitch strategy, I want to explain about the rules for the entry of the giveaway. First thing you should do is subscribe the channel and like this video, and also you should comment on the video. So if you do these three things, you will be eligible for the giveaway, and it will be live for the next 15 days. So on the next 15 days, I will create a video and pick up the winners and deliver the account. All the best, guys. So the first thing first, what I will do when coming into the charts is I will just identify where the 99% sheeps are getting trapped. For example, for this day, if you see, this is where the smart money clear order block is there. So these are the session breaks where the days are separated. So this is where a clear trap is there. This is where a clear trap is there. And I think you can see these boxes. This is the London kill zone and this is the New York kill zone. If you can observe the kill zones, I just waited for the price to take this liquidity. For example, if you see, the liquidity was taken out. So the first point in the checklist is done. All the money is collected. So the second point in the checklist is we should wait for the imbalance. So I think you can spot the imbalance. For example, if you see from this candle to this candle, you can spot a small imbalance. So this is the confirmation which we got, and that's why we use this as the order block for the price of the entry. Simple. You got the entry here with the smallest stop loss and target the next transaction. This is where the next transaction is. Simple. You got the 12% account gain. You can pass these challenges from a single trade, guys. Using the strategy, the RR is very high. Your equity curve will look like this. A guy from the YouTube messaged me on the Discord that he passed a 200k FTMO challenge by using the same concepts I teach in the YouTube. He created his own entry pattern and own perception of the entry, and he created his own strategy, and he's killing it right now. So if you put on the work and watch all the YouTube videos, because my YouTube channel is full of knowledge, you can't get any type of hidden information like this on any other YouTube channels. So just watch the videos and take the notes and put in the work. You can also become like that guy. Not only that guy, I'm receiving a lot of messages from this type of guys. Like, so if you see in this example, the first thing I always observe is money level. Simple. This is where the money is, previous session liquidity, and this is the order block. I think if you see, there is a clear imbalance. So this is the everything in the checklist is there, liquidity is there, money level is there, rejection candle is there, timing. If you see, we entered at this box. The every trade I take is from this box, every trade I take from this box, because we have backtested tons of timings by using our algorithms to backtest the whole data. We found out these are the timings where the sweeps will happen. These are the kill zones. These timings are directly aligning with the kill zones. So just use this strategy, guys. Simple. If you see here, again, liquidity was taken out, again FVG formed, the confirmation is there, and the entry we entered on the kill zone, this box, boom, targeted the next transaction. Simple. This strategy is very simple, guys. You just need to work on. Simple. If you do it over and over and again, you will make banks of profit. Same checklist over and again. For example, if you see, this is the APL level, because a lot of money of the market makers is here. Lot of money is there at the breaker block level. It's very high prop. A lot of losses should be mitigated. So that's why we waited for this is the liquidity. London high is taken out, and also it mitigated the money level. A rejection candle is there. We directly executed, and also the timing is there. Boom, we targeted the next liquidity. Where is the next liquidity point for the transaction? Targeted this, and we made like 7.42 in a $100k account is. I made $7.5k from the single trade. In this day we got no trade, so that's why this is a build up. We made this day $2.3k. So it's like same routine, guys. If you go back to the 2006 charts or 4 charts, it will be the same routine, nothing new. The markets move the same because the banks will impose some rules on the market makers. They can't move the price in a straight line because the economy will collapse, right? So they need to respect the average daily range. So that's why they will just take the liquidity and form the high and low of the day. Simply we're catching the highs and lows of the day and making the money. Simple. This is the simplest shit we are doing, and following the market makers like a small fishes which follow the big whales. Simply we are making lots of money. So this is the strategy you should use. Never sleep on it. If you master the strategy, you are settled for the lifetime. Just keep on working. I have back tested this strategy from the last 5 years. I have put blood and sweat for the back testing and found this edge. You got this edge in a simple 20-minute time span. Just go on back test. Don't be lazy, guys. You will lose a lot of money and blow a lot of challenges if you don't have a proven strategy that was backed up with the years of data. This is very important. You can't be profitable in the markets by just watching a YouTube video about the concept. You should need an edge that is going to appear over and again in the marketplace. Whereas I refined this liquidity inducement theorem for the past 5 years by keep on refining and adding up lot of data. But if you put in the work and lot of hard work in backtesting and everything, you can eventually change your life and travel the world and simply trade. Literally, I am receiving tons of messages from the YouTube community who are watching my videos and creating their own strategies based on the concepts by just watching the videos over and again. You can watch ton of videos about the liquidity inducement theorem in our YouTube channel, and if you want any other videos regarding any other topic, you can just comment on the video. I can make a clear explanation about the topic you need. Or if you're a type of person who want to fast track their growth and serious about the trading and want to get funded in 90 days like these people who are consistently profitable in the markets and milking the prop firms every month, day in, day out, like Eduardo who has made $1,300, and also like Friday who made $1,500, and also Ajibola who made $1,200. They are not doing any magic spells or anything. They are also came from the same situation like you guys are. They are also having a lack of strategy problem and they have a lot of mindset issues. This guy Eduardo came to me 2 months ago and he don't know where to look at and where to look for entries or anything. I completely teached him and we worked on his mindset, beliefs, etc. And I gave him my 9-point checklist LIT and he became continuously profitable trader after 60 days. This can be you. If you put in the work, then you can change your life and retire your family. The main reason why they are doing this much good and when compared to you guys is I have spent 5 years of my lifetime refining my strategy over and again, day in day out, backtesting 16 hours per day without sleep some days, and came up with the strategy by constant lot of losses and lot of lessons, lot of blown challenges. I developed this strategy which has over 80% win rate, which can benefit a lot for your mindset and your peace. Then your equity curve is like going to look like a rocket and your profit splits will look like this every week in, week out. So you are not going to go through all the hell I have gone through, and you are taking your first trade by using all the data I have collected. Your first trade is going to look and it will come up with the 80% win rate trade. So this is what gives you the edge and you can milk the prop firms. If you want to become a finite trader in 90 days guaranteed and want me to one-on-one mentor you and access to the liquidity inducement theorem, 15 GB of exclusive private content, and want me to review your trades in the journaling template which you will be added once you join the one-on-one mentorship, and also live trading 3 times per week with the private community members and lifetime access to the LIT private Discord and video mentorship tab where the one-on-one video recordings will be posted, and also access to the journaling template where you will be journaling your trades, and also the backtest of the 5 years of the edge we use. So click the link in the description if you want to become a funded trader in the 90 days guarantee. I am so confident, excited for the one-on-one mentorship, guys, because I have seen ton number of students who are facing the same type of problems like you with the consistency of the trading and losing challenges over and again because of the lack of strategy and risk management and psychology. And after joining the mentorship, they got insane changes in a 1 month itself and they got funded in the 90 days. I can give you guarantee that you will be funded in 90 days if you put on the work and if you complete all the tasks I gave you in the one-on-one mentorship. And if you are still struggling to get consistency in the trading after the 90 days, I will do the live trading every day with you until you will get funded and become consistently profitable in trading. This much of guarantee and confidence I can give you about the liquidity inducement theorem and become a consistently profitable trader using the hidden layer of smart money. It is a very wise decision than buying a prop firm account without having a proper knowledge when compared to the investing in the quality education and acquire the edge that was proven back in the data.